Stop trading Forex. You should only be trading in the futures market. And there are two main reasons for this. The first reason is that futures has zero spreads, whereas Forex has very high spreads. And all this means is, let's say if you're going to enter into the market, for example, right here, if you were going to enter into the market, you would get entered in at exactly where the price is showing. Whereas if we were looking at a Forex chart, if you was to enter into the price action right here, you will get filled either a bit above or a bit below because there are spreads in the market. Now, another reason you should be trading futures over Forex is because of the manipulation. There is simply hardly any manipulation in futures because everybody is trading the same price action. Now, again, all I mean by that is on Forex, depending on what broker you are using, the price action is slightly different. You can see this yourself if you go to a Forex chart and look at the different brokers. The wicks are all off by a few ticks. Whereas if you are looking at the futures market, every single price action is completely the same. So this is why you should be switching over to trade futures only. A fair value gap entry and a strong draw on liquidity is all you need to have over an 80% win rate and to become a profitable trader. Now, you just need to trade fair value gaps differently to how most people trade fair value gaps. Instead of seeing a bullish fair value gap in the market, for example right here, and then looking for long positions, what you should really be doing is waiting for candle closes below bullish fair value gaps, because this shows us that we have now inversed this fair value gap. So we should now either come down and take some sort of sell side liquidity, or at least tap into an unmitigated bullish fair value gap in the market. So what I will do is enter into a short position. My stop loss will simply be if we get a candle close back above this now inversion fair value gap. Then my take profit will simply be the strong draw on liquidity. In this instance, we have equal lows resting in the market on the 5-minute time frame. Now, this strategy has over an 80% win rate, and I trade it live every single day in my Discord. All the links are in my bio if you want to watch me trade live and learn this strategy. You should not be trading all day in the market. There are certain times in the market that you should be trading because that is the highest probability, and it is when there is the most volume in the market. Now, the time I like to trade in the market is from 9:30 New York time to 11 a.m. and this is a perfect example on why, and you can go to the charts and check for yourself. Every single day at 9:30 a.m. New York time, the stock market opens in New York, and this is simply where the most volume is pumped into the market, and the way that you can tell this is by the size of the candles. As you can see here, there is lots of movement in the charts and the candles, which simply means there is a lot of volume and overall a higher market conditions than if candles look like this when this is before the market is open. As you can see, there is not really any big candles and we are kind of just going sideways. So if you want the highest probability and the most volume when you are trading, I definitely recommend you trade 9:30 a.m. New York time to 11:30 a.m. Now, if you want to watch me trade live at these exact times, then all the links to my Discord is in my bio. I have not lost a trade in over 8 days, and this is a perfect example of why I don't use order blocks or breaker blocks or anything like that, and I just stick to liquidity and fair value gaps. With this price action right now, as you can see right here, we have what most people would call a market structure shift or change of character to the downside. And what that means is after we get this in the market, we think that the market is now going to carry on going down. So we will look for an entry for short positions of a bearish order block or a bearish breaker block. And this is just completely wrong in my opinion. I do not use anything else other than liquidity and fair value gaps because that is literally all you need. I will see this as a sweep on sell side liquidity. After the sweep on sell side liquidity, I will mark out this bearish fair value gap, draw it on my chart, and I will wait for it to be disrespected. Now, as soon as we disrespect this bearish fair value gap, I can now expect price action to come up and either take some sort of buy side liquidity or at least tap into an unmitigated bearish fair value gap in the market. and this is why I have over an 80% win rate and I trade live every single day on my Discord. I had a 100% win rate today in the markets, and all I trade with is fair value gaps and liquidity. We have swept sell-side liquidity that I was resting in the market. Now that we have swept sell-side liquidity and my bias is bullish, I am going to look for long positions. Now, I don't enter into long positions how you probably do. I actually use bearish fair value gaps to long from and not to short from. Now, the way I do this is I simply wait for a candle close above a bearish fair value gap in the market. This then tells me that we have inversed this bearish fair value gap, so I will enter into a long position on the candle close above the fair value gap. Then my take profit will simply be buy side liquidity in the market, because now we have inversed this fair value gap. What we should do is come up and either tap into an unmitigated fair value gap or at least take some buy side liquidity that is resting in the market. Now, this is the exact strategy that I trade live every single day in my Discord. If you want to join my trading community and watch me trade live every single day, all the links are in my bio. This was a winning trade I caught live on stream in the markets today with over 200 live viewers. Now, today in the market, my bias was more bullish than it was bearish, so I was mainly looking for long positions that I wanted to take in the market, targeting buy side liquidity. If we are looking at this price action, as you can see, we have this nice draw on liquidity right here, which is a swing high. Now, when I am looking to enter into long positions, I enter from bearish fair value gaps. As you can see, we have created this nice bearish fair value gap right here in the market. So all I wait for is a candle close above a bearish fair value gap, for example, exactly like this. Then what I will do is enter into a long position. My stop loss will simply be if we get a candle close back below this now inversion fair value gap. Then my take profit will be the buy side liquidity resting in the market, but I will move my stop loss to break even as soon as we take some sort of internal liquidity in the market. Now, this is the exact model that I trade live every single day that has over an 80% win rate. If you want to learn this strategy and watch me trade live, all the links are in my bio.